Welcome to Spiedel's Federal Tax Minute. I'm your host, Catherine Zidane, and this week we're discussing a revenue procedure that provides for a simplified accounting method change for research expenses. You can stay up to date on federal tax law changes with a subscription to Spiedel's Federal Tax Letter. For information on what's included with this monthly subscription, go to spiedel.com and click Publications. Revenue Procedure 2023-08 provides a simplified method for taxpayers to obtain automatic consent to change their method of accounting for research and experimental expenditures under IRC Section 174. As a result of changes made by the Tax Cuts and Jobs Act, beginning with the 2022 taxable year, specified research and experimental expenditures under Section 174 have to be capitalized and amortized over 5 years, or 15 years for research conducted outside of the United States. While many lawmakers have stated that they want to see this change deferred or repealed, to date an agreement has not yet been reached in Congress to make this happen, nor do we know whether this change is included in the current spending package being negotiated. Unless a deal is reached, taxpayers are required to start capitalizing these expenses beginning on their 2022 tax return. Under the Tax Cuts and Jobs Act, the change from deducting research and experimental expenditures to capitalizing them is defined as a change in accounting method that's applied on a cutoff basis for any research and experimental expenditures paid or incurred in taxable years beginning after December 31st, 2021. The law does not allow for adjustments under IRC Section 481 to be made. Revenue Procedure 2023-08 provides an automatic change in method of accounting procedure for taxpayers to comply with Section 174 by filing a statement with the taxpayer's original 2022 federal income tax return instead of filing Form 3115. This provides a simplified way to change an accounting method. If Congress delays the implementation of the Tax Cuts and Jobs Act changes, the statement would be attached to the return for the taxable year in which the change goes into effect. The change in accounting method statement is required to include the taxpayer's name and EIN or Social Security number, the beginning and ending dates of the first taxable year in which the change in method of accounting takes effect. For calendar year taxpayers, this will be January 1st, 2022 through December 31st, 2022. The designated automatic accounting method change number, which is 265. A description of the specified research or experimental expenditures, the amount of specified research or experimental expenditures paid or incurred during the year of change, and a declaration that states the taxpayer is changing the method of accounting for specified research or experimental expenditures to capitalize those expenditures on a cutoff basis. Taxpayers who make a change in method of accounting for research and experimental expenditures after their first taxable year in which the Section 174 changes become effective cannot apply the simplified relief provided in Revenue Procedure 2023-08. Instead, these taxpayers have to file Form 3115 in that subsequent taxable year. Only research and experimental expenditures paid or incurred after December 31st, 2021 are accounted for under the new Section 174 capitalization rules. This is the effect of applying the changes on the cutoff basis. Any items arising before the year of change still have to be accounted for under the taxpayer's former method of accounting. We've created a sample change in accounting method statement that will be provided to attendees of Spiedel's Federal Tax Update webinar on January 5th and 6th. You can go to spiedel.com to see a complete list of topics covered in this course and to register. That's all for this week. Join us next time for another episode of Spiedel's Federal Tax Minute.